Let's start with the gold price. Then there's a bit of a green on the screen on that one. It's a tight range as safe haven bids help prop up the prices, but the stability in the global equity markets today is keeping the prices under check. Let's take a look also at the crude oil prices, which are trading higher today at around 106 a barrel, as cold wave in the US has raised energy demand on a weekly data. And on your screens, we are looking at yet another 0.5% of a gain coming in. It's a third straight day of gains coming in for all of that energy pack. Let's get on board then. Vijay Bambani, who's author and CEO at BSPL India. Also joining us in Ahmedabad studios is Biren Vakil, who's commodity consultant at Paradigm Commodities. Vijay, hi to you first. And what's your sense now really coming in for the energy space? Because we have seen support, the fundamentals are positive. It of course is going to be the US non-farm payroll data tomorrow to give us direction. But for the very near term, today and tomorrow, how would you trade?
Good evening, Manisha. I think volatility is likely to remain what you have seen in the last 2 or 3 trading sessions, especially in natural gas. Yesterday, the intraday range itself was mind-boggling, and that kind of volatility in crude oil might come, whereas in natural gas you might see a slight tapering off of the beta factor because of regulatory intervention, thanks to margins being raised on fresh exposure. Where crude oil is concerned, I think once it crosses 61, 65 odd levels, it may make an attempt to test the 6,225 odd levels. On the lower side, I think 6120 to maybe even 6100 might just be a short-term support which you need to watch out for. As long as the bulls manage to defend 6100 levels, I think they have the wherewithal to try and attempt to take crude oil prices closer to the 6,200 to 225 levels.
It actually has been the last half an hour when you have seen that uptick coming in for the Indian prices, the crude as well as the natural gas prices, where you have seen an immediate jump up coming in for prices. Biren, what's your sense though in case of the crude oil prices? We have come up quite smartly today, 6150 almost. Where do you see the prices headed?
After natural gas crude market moves into inversion, today it is flat, but going forward I am expecting backwardation. Almost all the macro triggers like inventory or slowdown are fully priced into current valuation, but I am expecting some kind of X factor kind of thing or abrupt moves, probably upside tick slightly because of Ukraine situation, Ukraine scenario. Technically speaking, or as far as trade is concerned, I would prefer to be long around 690, 6090. Stop here would be 6,000 and upside opportunity is 6250.
Another space which has been holding quite smart has been the precious metal space. Not so much for gold, which is at 1 week highs, but it really has been silver which has been moving highs. For last 24 hours, we have seen a good 2.5% of gain coming in for silver. We are back about $20 per ounce and a good 1.25% of gain coming in for the Indian markets as well. Vijay, 45,000 almost on your screens. How would you want to trade?
Manisha, I was unable to buy at 42,500 levels, which is a level I was waiting out for. Having missed out a buy opportunity in the physical delivery space, I would sit on the sidelines rather than attempt to make up for the lost opportunity by going into the leverage space. I think leverage space is not attractive enough because in the last few settlement cycles on the expiry computation, I don't see the bulls having even recovered the cost of carry. So unless you see at least a significant previous swing high resistance being overcome and the bulls managing to keep silver prices above that threshold persistently, open interest and traded volumes rising, it is a mere technical bounce back at this point in time. Early days yet. Whether it would translate into a trend reversal or not, the coming few trading sessions will tell, but at this point in time, I lack the gumption to go out there and write a check out and buying silver.
Biren, what's your sense in case of the gold and silver prices? Because we have seen higher lows coming in for this space. There has been a lot of safe haven buying, especially with what's happening in the emerging markets. Do you see further gains from here? Would you go out and buy?
I think market remains choppy. Basically for silver, and especially for silver, it's a perfect algo product, and I don't think other than mechanical traders can succeed with ease. As far as gold is concerned, I don't see it breaks current range of 1230, 1280. If it managed to close above 1280 or 1270, then we can see sharp upside. Since everybody, majority of consensus is bearish, I'm not ruling out a sharp upspike.
Biren, how would you look at the base metal rebound that we have seen continuing for last 3 or 4 sessions now? Do you see it sustaining, and how would you want to take a look at the copper at these current prices of 440 odd?
I think Chinese market are opening with next week, so a counterintuitive rally, moderate rally is probably on cards. Basically, I am bearish for the intermediate term, but so far next week is concerned, or 2-3 days scenario, I would prefer to be long in copper around 440. Upside 447 is my target, and 435 is my stop loss.
Vijay, what's your sense now coming in for the base metal prices? Because even as the fundamentals haven't changed much, it really seems to be a technical rebound, as you pointed earlier as well, but it really seems to be holding on.
Yes, Manisha, the technical bounce is holding on. Unfortunately, the open interest or the traded volumes aren't really rising too much. There is still no eagerness in the trading fraternity to go out there and buy. There is no sense of greed appearing on the screens that the traders are rushing in to buy, fearing having to pay higher prices at a later time or date. So unless that really happens, this could just be a technical pullback. I have a feeling quite a lot of it is basically factoring in some amount of choppiness in the USD-INR pair in the coming few trading sessions, because the overseas prices are not half as volatile as the kind of beta that you're experiencing intraday in the Indian markets. So currency factor, and probably since our markets are lacking depth, traded volumes and open interest are thin, a little bit of a nudge in either direction is resulting in slightly exaggerated price movements. I would not really want to go out there and buy.
Let's talk about the agro commodities now, where we have seen a bit of a decline continuing for most of those commodities, especially the wheat prices, where we have seen yet another 0.5% of a decline coming in. The cardamom prices have declined on a lower circuit today, and that's pretty much the case across board for many of those commodities. Vijay, the wheat prices, especially because you had given a sell call onto that one, and we've seen considerable declines for last couple of sessions.
Manisha, I have a feeling the weakness is not done yet. If at all I was to see prices close to the 1650 levels, I don't really mind going short all over again. I think this time around, if the decline was to extend, it'll go below the 1625 level that I talked about last time. It'll probably test 1610, 12 kind of levels. So this time around, though, I might want to initiate shots on a lower exposure than as compared to the recommendation at 1665 or 1675 levels, because much of the decline is already done. And a decline below the 1600 levels seem to be a little low probability kind of an event. So by all means, go out and short if you see 10-12 rupees advances from the current levels, but your traded exposure needs to be tapered off a bit.
Biren, what's your sense for the spices space now? Because while we've seen a decline in cardamom, it has been a choppy commodity, of course, trading on a lower circuit right now. How would you look at something like a coriander or cardamom in the very near future?
Cardamom is being a very small market, it could be easily hijacked, so I avoid this market. But coriander looks a little bit interesting story, because inventory is tightest in last 5 to 7 years, and open interest to inventory ratio seems a little bit interesting. I would prefer to be long in coriander around 8750, 88. Upside opportunity is around 9200, and stop loss here would be 8650.
Well, also let's take a look at the sugar prices, where we have seen a lot of movement coming in. The prices have been moving in hope of a government finally approving a package of incentives today for raw sugar production, which could help the exports. The announcement, of course, has been delayed by nearly 2 months, and the industry is now keenly awaiting the move today. On your screens, 0.5% of a gain up coming in yet again. Vijay, how would you look at it? Of course, it is reacting to a possibility of an announcement coming in today evening, but on the charts, does it look some strong?
Yes, Manisha, I think the downward scope which I have been talking about in the last few trading weeks is fairly limited, because The prices which you are seeing are subdued by way of regulatory intervention, by way of electoral considerations, and the rising input costs both for the farmer and for the mills will warrant that once these pressures on prices are taken away after the elections, my guess is sugar prices are heading towards the 3,000 levels in the mid and far month future series. So if at all you're seeing prices of 2,625 or even 2,650 levels, by all means go out there and buy the mid and far month futures contracts. I think come April end or May, these prices are unlikely to be available in the financial futures markets.
Fair point. Viren, how would you look at the edible oil space? Because this is one area that has seen some support as well. Not so much for soy oil, but the soybean prices have been gaining. How are you looking at the divergence right now?
I think soybean oil may have limited upside. Downside is almost I'm near bottom. We are near bottom. Ukraine unrest may affect sunflower seed oil supply. So my bet here is to go long in soybean oil March around 675, 77. Stop here will be 670 and upside objective is 685.
Let's get in a sugar perspective from an industry person as well. Joining us on the phone line is Praful Vitlani. He's proprietor Jagjeevan Kesavji and Company, and he joins us on a Mumbai phone line. Mr. Vitlani, hi, welcome to the show. Markets are yet again awaiting a government announcement today in the evening on the raw sugar export incentives. What's your sense? Because the industry really seems divided on whether the incentive is going to be between 2,000 or 3,500 rupees per ton on the higher side.
It will be 3,500. It should be 3,500. And the way, because next season's already they have put the cane already over there. So I think even next season minimum cane price could also be decided today, and that will be around rupees 220. So minimum from the central government price of cane which is being decided. So yes, this today in there is already, this is the fourth meeting I think likely to be, whether it is in agenda or not, but I think it should conclude today.
Sure. Mr. Vitlani, as you pointed out, there have been 4 meetings already. The announcement is deferred and delayed in last 2 months. What is the industry expecting? I mean, it's quite late already. We are almost nearing the end of crushing season. With the prices already, they have been trading below cost of production for such a long time. What's your sense on the whole scenario for the industry?
Sometimes late decision gives the benefit, because last Friday, the market was $400. Now it is $443, and even the book is what 10%.
All right, Mr. Vitlani.
Hello.
Yes, we can hear you.
Yeah, and even the industries, if they get the export benefit also, subsidy. So international market up by 10% and export subsidy, both comes, then that will be a good. And we are not too late also, because up till now already 10 lakh ton export is already being done, 1 million ton. Whether subsidy is there or not. So if after subsidy another 1 or 2 million ton this goes, then we will be at good at par, it should be.